Welcome to the AACFB's 2025 Meet the Funder webinar series. My name is Maddie Garnett. I am the Director of Membership and Programs for the AACFB, and I will be your host. Our presenters today are Stephen Engel and Alicia Kramer from Channel. Channel is both a funding source member and a gold sponsor of the AACFB, and I'd like to thank them for their continued support of the association. Before I turn it over to Stephen and Alicia, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit your questions in the box and they should be answered by the end of the webinar. The entire webinar should take no more than 30 to 45 minutes. For those of you who would like to review this webinar at a later date, it will be posted on the 2025 Meet the Funder page of the website and will be emailed out to the AACFB membership. At this time, I will turn it over to Alicia and Stephen. It's all yours.
Excellent. Thanks so much. Well, thanks everyone for attending the Meet the Funder webinar with us today. As she said, my name is Alicia Kramer. I'm Senior Vice President of Sales and work with 6 of our sales representatives calling on brokers and lessors across the United States. Been with Channel, I just had my 3rd-year anniversary, and prior to that, I was with Great America for 9 years, and then U.S. Bank Small Ticket Equipment Finance Group for 17 beyond that. So excited to be here and to share some information about Channel.
And I'm Stephen Engel. I'm working on my 7th year with Channel. I have a background previously from Channel in the manufacturing and construction industry, so more on the end user side of things. But Director of Partner Relationships for Channel, I manage the East Coast partner relationships there on the broker side of things. So very much a relevant audience to me today. And I also look forward to sharing some information about Channel and how we might work together.
Excellent. All right, well, let's dive in. First of all, for those who may not be familiar with Channel, we are an on-balance sheet lender, and we're a little unique in the marketplace in that we offer both equipment finance and working capital. We only work through brokers and lessors and third-party originators, like the folks on this call. And really our goal is to find ways to add value, whether it's one product or both of them that are sold through your companies to your end users. So right before the AACFB conference in Las Vegas, there was some big announcement associated with Channel. We were acquired by Onset Financial at the beginning of April, and we fielded lots of questions at the booth about that partnership and kind of what it looks like for both Channel and the combined entity moving forward. And so we thought it might be helpful to start out the webinar by just talking through some high-level information about both organizations and what we expect moving forward. So we'll give a brief overview on Channel first. We were established in 2009 as a working capital only provider. Oh, thanks, Stephen. Focusing on small to mid-ticket deals. So that would be anywhere from $15,000 to $250,000. In 2024, we funded about $600 million, and that's a combination of both the equipment finance product and the working capital product combined. We've got about 210 employees, and we are located or headquartered in Minnetonka, Minnesota. So if we contrast that with Onset Financial, Onset was also established in the late 2000s, 2008. Their ticket size is mid to mega. So I'm going to park on that for a minute and talk a little bit about what that looks like. So Onset has a direct sales team that calls on end user customers. And so they really will not entertain any type of potential borrower unless they've got about $20 to $25 million in annual revenue. So if you contrast that with the typical Channel borrower, our typical borrower probably has a couple of $1 million in revenue at the very most, whereas they won't even talk to someone or entertain a deal unless it's in that $20 to $25 million range from an annual revenue perspective. In 2024, they originated $1.1 billion in assets, and they've got about 150 employees. They are headquartered in Utah. They've got 2 locations there, and So a lot of similarities, but also a lot of differences. So if you put those two entities together, this is what it looks like. So 32 years time in business, we've kind of got the spectrum covered in terms of ticket sizes from an equipment finance perspective. They don't offer working capital, so that's unique to Channel. Lifetime fundings of over $8 billion. And obviously sizable assets and dollars funded. Combined entities are about 360 employees. Well, those things I think are helpful to gain perspective. I think that the thing that our team would like this audience to understand and reinforce is the fact that Channel is going to remain the same. And so our leadership team, the way we transact business is very different than an end user originator. And so while it's exciting to have some new financial relationships that we may be able to explore, while it's helpful to have that additional entrepreneurial spirit injected into our company, the core block and tackle things about Channel are not going to change. One of the things that we heard at the booth at the AACFB show in Las Vegas was, I love that you guys are now owned by Onset. Can I refer big deals over to that team and help those borrowers get financing? So the answer to that is eventually, but we're not quite ready for that yet. So I hope that the audience can appreciate the fact that it's been, just a couple of months since all of this became reality. And so we're still in the process of kind of getting to know each other and understanding each other's processes and how we can leverage the relationships that we have within the industries and the capabilities that we have as individual businesses before we start to try to leverage those for our partners. So while we appreciate the questions, please keep asking them. We're not in a position today to go ahead and transact those larger ticket deals for our partners, but we will definitely keep you posted as those capabilities become more of a streamlined process for us.
So as Alicia said, we're very excited for a bright future together. But today we're really here to talk about Channel. And one thing when we think about Channel is, yeah, we're a generalist. When you think about industries, what industries do we fund and what ticket sizes do we do? We're not too dissimilar to a lot of other third-party originators out there. However, there are some certain things that we do that to our core we believe make us different. We call them our differentiators. And the first is understand and connect. And what we mean by understand and connect is we don't like to just dump our credit box and say, here's who we are, and you have to play by the rules, and that's it. No ifs, ands, or buts. We truly believe that each and every one of you comes from a unique background and has unique originations, and what you do is highly specialized, right? Otherwise, everybody would be doing it. So part of our job is to really understand what your business does and what makes you you and how you guys are unique, and really to align our solutions to what's going to work for you. And that's not to say we are going to do something crazily different each and every time. However, we do realize that this isn't an assembly line, right? Everybody's a little bit different, and we would treat everybody a little bit differently in that respect. Single source. As Alicia mentioned earlier at the beginning, we offer working capital and equipment finance. We believe that's a huge strength of ours. We know borrowers out there, we see it all the time in their bank statements. Borrowers looking for equipment finance are also taking working capital. We like to say, hey, this is your one-stop shop. This is a place where you can service your customer and take both products, and you kind of get a 2-for-1. We always like to say one of the most important expenses of everybody's business is the cost of origination. How much work it takes to get that person in the door. Well, now that you have that person in the door, why not be cross-selling them products? And we're happy that we can offer both those services. Tech and data enabled, we don't consider ourselves a fintech company. That's not to say we're on here trying to act like a lending tree or trying to be a Venmo or any kind of fintech financial institution. However, we do use data and technology in a way that how we think about our customers' experiences and how do we get faster approvals out? How do we provide a portal that makes your experience when you're working with channel a little bit more streamlined and a little bit more fluid, right? Something that makes it a little bit easier to work with channel. So yeah, we're not a fintech company. However, uh, we're not exactly living in the Stone Age either. We're fairly modern when you look at our portal and our systems and how we think about the world. There's a reason we can process 10,000 transactions a year. So, and then win together, right? This may be the most important one. We view the world as we're not winning if you're not winning, and that's extremely important to us. Otherwise, you'd never come back to us. Um, Always willing to go shoulder to shoulder on deals. And we don't want to put ourselves in a situation where, well, this is good for us, but it's not good for you, because we realize those win-lose situations aren't going to lead to future business. We want every situation we put ourselves in for us, you, and your customers and your vendors to be a positive situation. And sometimes that means not only are you have to give up something, but it means channel has to give up something too. And sometimes that's just what it takes to go get the right job done. So a little bit more specific, we're going to get into our product offerings here at really just a 10,000 foot level. We're going to start with our equipment finance product. It's a risk-based pricing, and what I mean by that is this isn't a pass. We are not a pass-fail type of product where if it gets approved, here's your rate, here's your term, and that's it, and that's what you can expect for every different product. We kind of play the curve of the credit spectrum where we're not a bank, but we're also not looking to buy those really storied, troubled subprime deals. We kind of play that curve of the A- through C+ credit spectrum. And with that, it can be a little bit of a slippery slope sometimes. So from a rate perspective, we do offer a variety of rates in terms that we think matches each and every customer to the best of our ability that makes it market, so to speak. Financing for a variety of equipment. Again, I said this in the beginning, although we consider ourselves different, we do consider ourselves a generalist, meaning we're going to do all the typical industries that most folks would do. And then a lot of our restricted industries are going to fall under the normals, the cannabis and, some of the firearms and normal ones that you would expect out of the industry. Ticket sizes, 15,000 to 250,000. Is typically what we advertise. Occasionally for the right customer, we can go a little smaller, but by large and in part, we like to stay in that 15 to 250 range. And where I would say our sweet spot is 150 to and less is where we do really, really well. Partnering with you to win business. Again, we are a third-party originator. You guys are our customer, right? And that's for both products really, but we're not going to vendors and asking for this. You guys are our customer, so we view this as a partnership, and that's kind of how we source our deals as a third-party originator. Working directly with dedicated underwriting and funding teams. Again, you guys saw the numbers earlier, 600 million. We have dozens of underwriters. However, you guys sending in deals, if there was dozens of underwriters underwriting your deal, every time you send in a deal, it'd be a different underwriter every single time. And there'd be no chance for that underwriter to say, hey, here's XYZ company, and I can see that company very often. Well, every time it would be very black and white, the underwriting process. We don't believe in that. We want our underwriters, when they see a deal, we want them to be familiar with our partners. We want them, if you're going to send in deals, we want our underwriters to be familiar with who you are and what you do, so they can, this kind of ties into the understand and connect portion of things. We want them to understand our partners as well, not just the front end sales side of our teams, but our underwriters and our funders and a number of other folks throughout our organization. So again, it's more of a curtailed product offering and not just a, here's our box, right? Not who we're trying to be. And then bundle with working capital, diversify and extend your business. Again, we've seen it time and time again. I'm sure you guys have as well. If you look at bank statements that your customers have, the customers out there are taking working capital. We've made some unique products that when we're offering equipment finance to make it really easy for folks like yourself to bundle on working capital offerings to help you guys sell both products. And then working capital, loans or advances up to 250,000. Credit decision in hours, working capital moves really, really fast. And so do the one thing that's unique about working capital compared to equipment finance, when your customers are typically looking to get a excavator, a forklift, or a printer, whatever they're getting, they usually have that planned out. And it's typically a little bit longer of a sales cycle. Working capital doesn't work that way. Opportunities come and go across small businesses' desks very fast, and they leave very fast as well. So our process aligns with that. I mean, we can truly take apps in and fund deals the same day, because sometimes that's how quickly those opportunities come and go, and we're here to support you to take advantage of those opportunities fairly fast. Monthly and weekly payments. A lot of folks on here might think about working capital, and their mind might immediately go to is that the daily MCA? That's where the industry came from a long time ago. We haven't done daily payments in a very long time. I'd say most of what we do, probably 50-50, is monthly and weekly payments. And then working capital retention team. When we think about working capital, really we think about this like a credit line that we're extending to your customers, because they can routinely come back to the honey pot and take more and more money. We'd like them to have that flexibility. And guess what? We pay when they come back to the honey pot each and every time. So what I like to say is it's our partner's job or your job to help us get that first deal in the door. But we have a dedicated sales team that helps constantly help that person take more draws, and we pay commissions on those every time, even if it's years down the road. So what I say is help us plant that first money tree, and we'll help you pick the crops every single year. And it is a good time when I get to give you a call and say, hey, guess what? XYZ, one of our good customers, mutual customers, took another draw for 100,000. I got $6,000 coming your way, and you didn't have to lift a finger. It's beautiful. Choice is a product that it's been about a year and a half for us. A while back, we took a look at a segment of our business of the top echelon of credits, and you can think of these as truly bankable deals. Customers that had 10 years time in business, that had healthy bank balances and had excellent FICO scores. Typically, there's a misnomer that, these people don't need working capital. Well, we came out with a product that is true APR, credit card rates, that is designed to go after that segment of customers, and we convert very well on that segment of business. So really a product designed for bankable customers and a graduated level of customers, somebody that you'd normally be able to out and go get equipment financed with a strong bank at a true prime plus rate. Well, we've got a working capital product that is meant for that, and they're taking it, right? The conversions are there. So it's done really well for us, and hopefully do really well for you. And then last, on one of many of our products, again, this is just a snapshot of what we do, our early savings program. There's always a number of customers, and I got a little example on the next page about this specific product, but the early savings program, there's always a number of working capital customers where you get an offer, and this is no different than equipment financing as well, but a lot of them, I want this to look like my mortgage. I want this to look like my auto financing. They don't want to pay for the money that they're borrowing longer than they have to. And at the time of payoff, they want all the remaining interest forgive. They want a principal only buyout. Well, we made a product like that, and it's been highly successful for us. So we thought today that we'd share an example with you that we just did, a real example where our early savings program was highly beneficial to a customer that probably otherwise wouldn't have converted without this product. So I'll dive in a little bit to mechanics, and instead of just reading this verbatim, I'll give you the high level of what was going on here. This was a gym owner, and they had a fairly large space. This was a pretty reasonable sized gym, but they wanted to knock down a wall and expand into the next location. And there was probably some equipment purchases going on alongside this as well. So this was truly an opportunity for single source. The equipment didn't close yet, but they had to knock down a wall, and then once you knock down that wall, you've expanded your gym location. But now you gotta make that location feel like your normal location. So there's probably some electrician bills. There's probably some different walls that have to go up, some paint that has to go up. Well, there's a whole bunch of costs that went in that aren't leasable, and they had plenty of money. This was a perfectly healthy business, but they didn't want to drain their bank account right in the middle of busy season just to go get this done. So working capital is a viable solution. However, this was a busy gym, and this customer was very adamant that they didn't want to have an early prepay penalty. This is one of those customers that wanted it to look, smell, and feel like their mortgage, and they didn't want to pay for the loan longer than they had to, especially because they knew how busy their gym was going to get. They had memberships waiting, so we wrote them a $250,000 loan, and then after a few months, they paid the loan off, and we forgave the rest of the interest, and they saved a little over, well, almost 28 grand in interest on that loan, which when you look at other working capital products in the market, that's a huge amount of savings, right? That's a huge comfort to the borrower that, hey, you're not going to have to pay for anything longer than you have to. So, and that was the difference maker in a deal like this. So, hope that example was beneficial, but I guess we'll turn it over to you guys now. And do you have any questions for Alicia and I?
If you have any questions, you can submit them in the Q&A box. It looks like Joan raised her hand. Hold on one second. Let me see if I can unmute her. Okay, it looks like Raffaello should be able to talk now. He raised his hand.
What's the best way to partner?
Well, we'd be happy to have a conversation after this. You can,
Okay.
We'll circulate our information, and it's also on the next page here.
All righty. Here's my dilemma, and I'm sure my dilemma is shared by many other of the people that are attending this presentation. Three letters, SBA. They've just pulled the rug out from everybody as of June 6th. I need a plan B that's going to be able to be a funding facility for my clients that may have MCA positions that are factored into the debt servicing and be able to absorb them in the facility. Is channel the right move for me?
It's a great question, and there's kind of a gray area. Channel will pay off up to 2 positions of MCA debt, but we typically would like to. There's a couple things that go into it, but typically I'm going to want to net 50% proceeds. So I'm not just going to wrap up someone else's debt and
Understood. You're not going to absorb
interest.
somebody else's headache. Fine.
Yeah, I mean, to me, that's robbing Peter to pay Paul. But if I can net them 50% new funds, and they can come to me with a story to say, hey, yeah, I have some debt out there, but I just need a little more cash because here's the opportunity that I have in my desk, then I'd be interested in something like that. But however, if I'm truly just absorbing someone's debt and just refinancing it, this probably isn't the right product.
No. That's not the end game on these type of originations from La Roma Corp funding. So we're on the same sheet of music.
Yep.
Give me my set of keys. Let me move in. I'm ready.
Sounds good. Yeah, I'd say if you're interested in partnering, send Alicia and I an email, and we'll be in touch and with anybody who reaches out and to have an initial conversation.
Fine.
discuss
I'll
it.
I'll scan the code right now, and I'll get to work.
Awesome.
Okay, it looks that you have another question from Joan that says, is there a credit matrix with an associated rate sheet? It is helpful in quoting purposes.
There is. We didn't want to get into too much detail on this call. We wanted to keep it a little bit more at 10,000 feet. But yeah, we have pretty full guidelines. That we can get to you, Joan. And Joan, I'd say let's have a conversation first, and I'd be happy to get into as much detail as you need to about channel, because we could go on for days. But yeah, whatever you need to know, I'd be happy to have a conversation, or Alicia would, and we can help you out with that.
We also had someone put in the comments, you mentioned ESP early repayment product available through a partner. Who is the lender on that channel or someone else?
Everything we fund, we hold on our balance sheet. So we are a direct funding source, and that's that, right? So it's through us, right? We made that product, and we hold through term.
Okay, and Bo said, is equipment financing and working capital available for startups with strong credit and outside income, or is this typically limited to businesses with 2+ years of operating history?
We don't have any products for people less than 1 year. And in equipment finance, we're going to be a little bit more conservative on time and business, especially because you're writing you think about it this way, let's say you have a 1.5 year time in business. Now you're writing a 4 or 5 year note for someone, and you got to make sure they're around. So we're a little bit more conservative there. On working capital, the terms are a little bit shorter, and the data is a little bit more refined, that we can dial that back a little bit. We're still never going to go past 1 year unless there's some crazy scenario, but by large and in part, I'd say working capital, the floor is 1 year, but we prefer 2 years. And on equipment finance, the floor is 2 years, but we prefer 3 years.
Okay, someone said, is your core product a term loan or a revenue-based financing product? And what are the implications for SBA loan eligibility after June 6th?
Both, if I understand that correctly. So all our working capital loans are based off of someone's revenues. I'm never going to extend money to someone if we think it's going to be abrasive to them. So a big part of the adjudication process, aside from credit and business credit and how long they've been in business, all that is the banks, right? It's what's the current cash flow of the business. And there's a lot of modeling that goes into dictating how much that business is going to be able to handle. And that's mostly revenues, but also bank balances. And then we write a couple different products from a legal standpoint from there. One would be an advance on their future receivables, and the other would be a traditional term debt loan, which I think answers your question. If that doesn't, if you could rephrase. And then the whole SBA implications, I'd say doesn't really affect us, because that's I'd say where we fit for the SBA loans is really we're separate and don't mix with them. But there's a lot of times where someone is looking for a graduated loan, and that process can take 6 months. All the time, because we can move so fast, I'd write a loan, and then when someone gets their senior secured financing, they could pay us off for a discount. We layer in a prepaid discount in there, and there's a lot of times that might make sense. But that would probably be the extent that we work with, or indirectly with the SBA in their products.
Okay, and then Asif says, this may be a little bit of a loaded question, but can you take our application and how does the compensation work?
Compensation is all, so we would always, on both products, give you what we're going to buy the deal for. And then depending on the deal size, you would upsell from there and add your points onto that deal. And typically the larger the deal gets, we would reduce our point caps there. So on the smaller deals, you can make 10 to 15 points typically. And then as those deals go up in the 6-figure deals, we start to lower those down to 8. And then some of our products that are a little sharper, like the choice product, cap off at 5, because that is one of those products where we've already reduced the yield pretty far down, that we've deemed that's what the customer's gonna take, and that's what is market for that customer. So. And in terms of taking your application, I'd say let's have a conversation. I don't know. Cart before the horse. I'd say let's have a conversation, figure out who you are. We can tell you a little bit more about us, and would love to learn to get to know you and go from there.
Okay, and I'm not seeing any more questions. If anyone has any more questions, feel free to reach out to Stephen and Alicia. Since there are no more questions, we will be ending the webinar now. A big thanks to all of our participants and especially our valued funding source member and gold sponsored channel. Thanks for a great job, Alicia and Stephen. We invite everyone to meet with Channel in person at the Commercial Financing Expo coming up in September in Austin, Texas. Thanks again for joining us and have a great day.
Thank you, everyone.